So good afternoon. My name is Jerry Caprio. I'm the William Breaux Professor Emeritus of Economics. I was CDE chair here for quite a while, 2006 to 22. And it's wonderful to be back here and see the class of, soon to be the class of 2025. I want to thank the Perry Jacobsson Foundation for funding this event to bring CDE alumni back to campus. I think it's a wonderful initiative, and we all enjoyed Aban's talk yesterday, and so I won't spend much time on an introduction, but I'll give you a little bit personal angle. So Aban was in the first class that I taught here in the spring of 2006. She was really an outstanding student, and it was a great class. She certainly came up with great questions then, and that was when, and she alluded to this yesterday, that she had applied to the CDE and gotten accepted in 2004 and 2005 before she came to be the class of 2006. And it was all about funding. And in those days, the CDE had no guaranteed funding, so we admitted a class and never knew who was going to get funding. That, for me, convinced me that this is the wrong model, and it was fortuitous timing based on the work that Peter Montiel and Tom had done in the years leading up to that, where there was a visiting committee that was formed to advise the CDE, and this would be a whole nother seminar to go into that, but they raised a lot of funding so that we could be a better funded program and get the class that we want. So you guys are the class that was wanted. The other thing that I would mention about Aban, so Aban was special in that case, so at least it motivated some of us to try to make that work so that we weren't missing out too many people like her in the future. And what she most stands out for in my mind is that during that semester, my wife came over for an event. I think it was lunch, because I recall we were this used to be the dining room, and we were sitting at a table here, and my wife was asking Aban about the program and what was it like, and was it really tough, she had heard. And Aban said, well, it's like the professors push the class to the edge of the cliff, and just as they're going over, they grab them and they pull them back, and then they start pushing them to the edge of the cliff again, and it repeats all year. So that example stayed in my mind, that I thought there needs to be a way that we can lessen the pressure somehow. So I think Professor Bacchio also heard that example, and I think that's when the length of the exams went down from 8 hours to 6 hours or something like that. So something like that. So anyway, let's get to the issue of financial inclusion, which is what Aban has worked on, as she mentioned yesterday. So you've spent a good chunk of your career on this topic, and certainly the most recent years. Why don't we start out, since for some reason not everyone signed up for Professor Uras's course, which used to be my course and the most important one here, but anyway. So why don't we start out with the basics? So what do we mean by financial inclusion, and why has it become so important in recent years?
Okay, thank you very much, Jerry, for that introduction. I honestly don't remember saying that to your wife, but it just does sound like something I would say.
She remembers it too, so I know I haven't just invented this.
And it's great to be back here again after yesterday, and since most of them have showed up, so that means I didn't do too badly yesterday. So thank you very much for coming again this afternoon. Okay, so coming to your question on financial inclusion. So I think as a term and as a concept, financial inclusion is not that old. I think we started hearing more about it in the 2000s. Mm-hmm. But the idea of providing access to financial resources to people who didn't have that access has existed for a long time. Right. I think previously in the 1990s, it was more in terms of financing businesses or financing entrepreneurs, small entrepreneurs. So the idea of microfinance had existed for a longer than the idea of financial inclusion. And a lot of that was grounded in the objectives of reducing poverty. I think that idea of how can we help through providing access to financial resources to the poor and the low-income households and micro businesses, that can then help them increase their incomes and thereby improve their standard of living. I think that precedes the concept of financial inclusion. And I think then you probably know and definitely know this better than me, that we saw kind of a wave of liberalization of the financial sectors in the 1990s and opening up of, and privatization of previously nationalized banks and financial systems, which I think triggered, growth of these financial systems, more competition, financial depth, all of that. But what was also evident in many of the emerging and developing economies particularly was that it didn't automatically translate into an expansion of the people and the businesses that were being served by the financial sector. So I think it was at that time, in that context, that we started to hear more about financial inclusion. So when we use this term today, and I'll talk more about how we think about it in the context of my organization, because honestly there isn't one standard definition for financial inclusion, as there isn't one for many other concepts in development also. So when we think about financial inclusion, and like I said, initially it was mostly about providing access to financial services, or mostly credit. Yeah. But then over time, and I think since the 2000, the concept has evolved considerably. And now when we talk about financial inclusion, it still talks about access, so providing access, but it has some added dimensions. And a couple of the key dimensions are usage. So, okay, you give access to bank accounts or to credit, but are they being used? If they are not being used, then access itself is not sufficiently capturing the idea of financial inclusion. And now more recently, we also see a great emphasis on a third dimension, which is quality of financial services. So are these services offered in a way which meets the needs of the clients, but are also safe to be used, and are there there mechanisms to make sure that the pricing, the grievance mechanism, so the whole ecosystem kind of supports access itself. So when we in AFI use financial inclusion, we are really thinking about these three dimensions: access, quality, and usage. And at the same time, we are talking about not just credit, but a broad range of financial services. So savings, insurance, payments. I think so the suite has broadened and the concept has also become bigger with time. Of course, that has its own complications, but that is how we think about financial inclusion. And I think to speak to the second part of your question in terms of why is it become important, or why are so many central banks and governments focusing on financial inclusion, and we can talk more about this a little bit later when we talk about maybe impact and what outcomes we are looking for. But I think it is grounded in this idea that if you want to have inclusive financial systems that serve a broad population, it may not happen automatically. And you need to have specific policies and interventions to kind of drive that expansion or reach through the right system. Right.
So if I hear you correctly, we shouldn't take much comfort, I guess, from the fact that hundreds of millions more people, like in India, have bank accounts without knowing, are they actually using these things. Could we talk about maybe, well, it's sort of getting to impact, but on what are some like examples of how this affects people's welfare?
So I think one of the obvious topics, and what we've already kind of referred to, is in terms of when you look at the different services that can be offered through the financial system. The obvious one and most talked about, and I think we had a chat this morning with Barak as well, is on the credit side. That you have businesses and small, not just micro businesses, but small and medium enterprises as well. So this whole kind of spectrum of businesses which require finance. And that finance is important, of course, to grow those businesses, which means, you know, you generate jobs, you, if you are integrated into the export chain, it leads to foreign exchange. So there are whole reasons of why a country or an economy would want to channel finance into their MSME sector, yeah, the medium, small, and micro, medium, and small enterprise. So obviously there is that channel through which you funnel resources towards entrepreneurship and businesses that in turn generates jobs, has potential to grow the economy and to have a broad-based kind of business activity in the country. But I think since the concept of financial inclusion is bigger than that, so the benefits are also bigger. One of the more kind of I think I see many of the participants, the fellows of the class of 2025 are from countries where digital payments have really exploded in the past few years. So how does that affect people's lives? I think it definitely leads to efficiency. It leads to lower transaction costs. So people who had to, you know, perhaps spend one day, leave their business or their family at home, take I don't know, a boat or a bus to a different town where they would then stand in a line for 2 hours to maybe pay their electricity bill, or, you know, send money to family in another city. They no longer need to do that. So there is a direct impact when people have access to, let's say, digital payment platforms. They save transaction costs and opportunity cost. And that, I think, is another one of the kind of tremendous impacts that we are seeing in terms of people's lives with the digitization and expansion in access to mobile financial services or digital financial services. So I think that in itself is a direct impact. And maybe just to offer another one is more on, and perhaps very relevant in the world we live in today, which is undeniably facing climate change. And I think, and I have one more, okay. So this one is about how do you help these small businesses to adapt and to mitigate the impact of climate change. So for example, if we can have products like climate insurance for farmers that are now going to be more vulnerable to natural disasters, crop failures. I think that's another kind of direct pathway we are seeing in which we can improve people's lives. And in fact, during COVID was also an interesting example where all of a sudden you had this kind of shutdown of the physical access to the financial outlets. You couldn't go to an ATM, you couldn't go to a branch. And then you had governments who wanted to make social transfers. And how do they get the money to the people? And that's also where you saw that access to finance became, or the ability of people to be part of the formal financial system digitally became a big enabler. So another way in which we see directly touching people's lives in terms of accessing government payments, especially social transfers, in moments of crisis like COVID, but also in moments like natural disasters where they need to quickly perhaps transfer money to remote areas.
Right.
I think those are some of the examples in which we are seeing why it matters to people to be able to access the financial system.
Yeah, I had a concrete encounter with this 6 years ago when I was in Kenya, and the driver for the organization I was with told me that literally because his mother was in the far west of Kenya, he lost a day's earnings
Yes.
to get money to his mother. So the fact that finance ministries and central banks are taking this more seriously is a sea change, certainly for the central banks, which I know well. What are their priorities in this area? What are they trying to do?
Yeah, I agree with you. I think it's actually very interesting to watch this change. I think I mentioned yesterday, but maybe I can talk a little bit about my organization and why this is linked to your question. So the Alliance for Financial Inclusion, where I work, is a network, a member-based organization where we have 90 member institutions. Most of these are central banks, some of them are ministries of finance, and we have a few more specialized regulators of, for example, microfinance, pensions, etc. as well. And it's really interesting to see central bankers talking about gender inclusive finance. I mean, I don't think if you walked in the halls of the IMF or in a central bank 10, 15 years ago, you would hear them talking about gender equality or how do we bring more women or into the financial systems. I just wanted to offer that description or information about where I work because that gives us kind of a bird's eye view of what we are seeing in terms of trends across central banks in emerging and developing countries. And I think some trends are quite clear. One is, which kind of drives this whole agenda, is that many of the central banks in our network, and I looked up this statistic yesterday just for this talk, is that central banks have now started to explicitly embed financial inclusion in their mandates. So, for example, when they are amending their acts or laws, institutional frameworks, they're explicitly starting to include financial inclusion. And I was quite amazed myself to see that 55 central banks have already explicitly included it in their mandates. And another 44 or so have kind of an indirect attribution to this being one of their mandates. So I think that's a huge trend in itself, that we are looking at this as serious business, not a fly-by-night international development agenda that is driven by donors. It's more like a permanent kind of cause that the central banks are going to be taking forward. So that's kind of a bigger macro trend. And then in terms of how they are trying to achieve these objectives, one of the biggest trend is that many central banks, I think nearly all AFI members now have a national financial inclusion strategy. So, and that is usually the starting point for most, and most of them, I mean, these are national agendas, but usually in most cases, the central banks are the leaders or kind of the custodians of the strategy. So the development of national financial inclusion strategies, which brings together the stakeholders under the leadership of either the central bank or the Ministry of Finance, sets the vision and the path for most countries in terms of what they want to achieve in financial inclusion. And then maybe just to briefly touch on some policies which we are seeing, and I'm happy to talk more about those if there are questions as well. It's not surprising that digitization is a big one. Right. I think, and that itself is a full-fledged agenda. Many countries have even developed their, digitizing the financial sector strategies as standalone documents. We are seeing a big trend in the digitization space, and that is seen as an opportunity to bring down costs of delivering financial services and thereby reaching segments and markets which were previously not being served by the large financial institutions or commercial banks. The other trend, which I kind of alluded to, is also looking at specific segments in country, and this differs from country to country depending on their challenges and their demographics, but we are looking at a greater kind of focus on identifying which groups of the population are disadvantaged or are disproportionately out of the financial sector. And women's financial inclusion is a big one, especially in regions like South Asia and the Arab region, where the gender gap in financial access is much higher than some of the other regions. There are also other groups that we find a greater focus in terms of policies. SMEs is another group. There is our special interventions being done to drive access to finance for SMEs. Other groups also include, more niche groups like refugee populations, internally displaced people. Some regulators are now even looking at how can we reach people with disabilities. So I think this kind of focus on identifying what segments and then what policies can be targeted towards those specific segments. And lastly, there are many more, but I will maybe talk about one more, and that is also looking at policies around inclusive green finance or green finance. How can they look at leveraging the financial sector to channel money, resources into more, or greening the financial sector. I think that's a big one, and most of that is around large infrastructure projects. But from our perspective, and we use this term in AFI, which is inclusive green finance, and the idea is that any green policies that you make need to also have a lens of how can this be, they serve the more low income and the poorer populations.
So that's really a broad mandate
Yeah, it's huge.
for your organization.
Yeah.
No wonder you work such long hours.
I know.
It would seem, at least one thought I had, having spent some time in a central bank, is that the development or the broadening of the concept of inclusion away from just credit to access to other financial services, like making payments, seemingly a simple one, but one that can be really important, actually helped the central banks get more engaged. Because if it's about, say, pushing regulated banks to extend more credit when the central bank is also often the regulator that's saying, wait a minute, you got to be really prudent about this, there could be a little bit of a tension there.
Yeah, and I think what another kind of window that this has opened, and it is in many cases is the central bank, which is also the custodian of the payment system, and which is also what we are seeing. Yeah, it is opening up the space for central banks to encourage innovation, which also is not typically something a central bank would do, which you would more on prudence and but because they have these now digital rails, as they call them, where you have the payment system, they invested in the infrastructure. And it's not just the central banks, you have complementary digital infrastructure like, you have what you need to do, for example, KYC online. Yeah? So e-KYC, so you need digital
your
IDs.
customer.
Know your customer, yes, know your customer. So because now they have the digital rails, and they're easier to control in terms of data and so they are also moving in this direction of, and they have this financial inclusion agenda, and what they have realized is that the conventional central banks are not, conventional banks and financial institutions are not going to be going to these markets, and they want to serve women, they want to serve SMEs. So then they're saying, okay, we have this agenda for financial inclusion, we want to reach these segments, the old guard is not going in this direction. So what do we do? And that's where they've actually started to create spaces to support innovation in a kind of this sandbox or protected environment, which is also something new for central banks. But a lot of them have embraced it, and you see all these kind of fintech experiments happening, new kinds of business models being supported. And of course, the idea is to expand the reach of the financial sector, to improve competition in the financial sector, and all of this, leads to more inclusive and more relevant financial services.
Right. Okay. I am going to, by the way, soon end my monopoly on questions to open it up to especially the class and to faculty. But first, a few others that your responses raised. So on the role of technology and competition in the financial services. So you might want to explain a little the example you had at breakfast about Uber providers becoming financial intermediaries.
Yeah, so actually we were just talking about this. So I live in Malaysia, which is quite, I would say, the rate of digitization of the financial sector is quite fast over there. And recently, so does everybody know Uber? Okay, so we have the equivalent of Uber in the region. I think it's a Singapore-based company, but they have operations in other Southeast Asian countries as well. So it's called Grab, and it's like a super app. Yeah, you use it when I moved to Malaysia 6 years ago, you basically use it to, like in Uber, you can get a car, you can order food on it, those kind of things. And recently, they have been given the license to become a digital bank. Yeah, so which was quite surprising for Jerry as well. Yeah. And this is kind of, why did the central bank do that? So they're not the only one. I think the Bank Negara, which is the central bank, has given out 5 or 6 digital bank licenses. But it's again, the idea is to have these digital banks which have a low cost business model that allows them to ride the digital rails that they have built. They already have millions of customers on their app. They have their data. So they can use that data to offer products like digital credit or saving products, which are more customizable, and they can be adapted to, even individual customers, and doesn't have to be like a one size fits all kind of product. And one of the reasons that they decided to give, I think that they are, and this is not just in Malaysia, several other countries are also giving digital bank licenses. I come from Pakistan, there are also digital banks in Pakistan, still in an experimental stage. Most of them are motivated, or this license is motivated by financial inclusion. How do we expand access to finance, diversify the market, etc. And of course, the challenge is that if you have these kind of providers, Ubers and all, holding people's money in their platform, it's like a deposit. So of course, they need to be regulated. If you suffer a loss, where do you go? So we are looking at these new kinds of players coming in, which is also, it's great, but it's also, I think, giving sleepless nights to the regulators and the central banks, because there's a huge challenge on consumer protection. You have very rapid digitization. On one side, they want to support innovation, and you have all entry of new kinds of players. But I think when we look at, we do this survey every year, and we ask our members, what are your top policy priorities? And digital is the first, and very close second is consumer protection, market conduct. Yeah, that's the second biggest priority, because they're completely interlinked. And I think they're nervous about, how do we make sure that the customers are aware? Frauds and scams, I don't know if any of you have experienced. I just experienced one before coming, and they blocked my card, and now my hotel was like, your payment is not going through. But I think it's the frequency and the sophistication of financial fraud and scams are also increasing. So we are seeing a really big focus on consumer protection and how do we equip customers with information and knowledge so that they make the right decisions and choices.
Is AFI doing anything on financial literacy?
Interesting. So financial literacy has also, exploded in a big way. I think in the past 3 or 4 years, we see more and more of our member institutions developing financial literacy strategies and launching financial literacy programs. And I think, now this is my personal view, not an AFI view, I think it's a scramble, right now, because they need to do something in terms of informing the larger population and they need to do something about consumer empowerment. And financial literacy is currently being seen as one of the key interventions that regulators and policymakers can do in terms of this consumer empowerment. Right. What works, what is effective, I think this is still, we don't know. But there are clearly, there's a lot going on. In fact, so the way we work in AFI is that we have these different working groups, and our members join these working groups to develop knowledge and to exchange information. And there's a huge demand that we need a separate working group on financial literacy because it has become so important and needs attention on its own.
So if you were speaking, say, at the University of Chicago, I could imagine a few people on the faculty saying, well, actually, isn't that all the government should do is to increase financial literacy, but just let the consumers protect themselves?
Yeah, I'm not so sure. I think with the digitization, when what we are looking at in terms of our members, of course, on the consumer side, they're doing that, but there is a huge investment needed on the infrastructure side. Cybersecurity is a huge area for our members. How do you make sure these digital infrastructure are safe and secure? You have all these, sometimes you have these small fintech outfits offering financial services plugged into the main, payment system of the country. So one of the other bigger areas linked to consumer protection and safeguarding the financial system is digital infrastructure and cybersecurity. Sure. So that's also another big one. But to be honest, I don't know what should these financial literacy programs look like, especially if, I always say this, I don't like to say it, but if you want to do it at scale. I think the jury is still out on that one.
Right. A central bank governor in Brazil once explained to me, or actually lamented to me, that with the decline in inflation, financial literacy had actually decreased. People used to be able to do, compound interest in their heads when there were these enormous interest rates, but that declined, and he was wondering how to counter that. He might say that, so then a few well-publicized cases of fraud might help. But I guess this sort of gets at what was mentioned yesterday about the information asymmetries in this sector. If you believe that there was perfect information and everybody was rational, we wouldn't have Ponzi schemes in every single country. So.
Exactly. I don't know how many times you're told not to share our PIN codes, but yet people share their PIN codes. I think even living in Malaysia, I think at least every day there's a news item about some kind of victim of fraud. And I think there are, of course, some groups which are more vulnerable than others. And I don't know how, but the scammers are definitely, I've heard governors say that the scammers are smarter than the regulators. And it's more like a catch-up that they're playing. The fraud happens and then the regulators kind of catch up on how to not let this happen the next time. But prevention is becoming quite a challenge.
Yeah. So are there any differences between finance ministries and central banks in terms of what they're doing, in terms of specializing in their role in encouraging financial inclusion, or is that just differs on a country by country basis?
Actually, in most of our members, we see that the mantle is carried by the central banks. So the ministries have kind of devolved this objective or this policy area to the central banks. Ministries that we see are more interested in areas like financial literacy or financial education, and that cuts across actually all regulators. So it's also something we see in the SECs, the securities, and so because many of them regulate fintechs and or NBFIs. So that's also, so this is one area that we see cutting across, but in most cases, at least what we see in AFI is the ministries are not as active as the central banks. They are part of the kind of stakeholder group that the central bank works with, but it's usually the central bank, the private sector, and to some extent, but really not so much, you would have maybe like the not-for-profit sector coming in from the microfinance angle.
Right, okay. Before we open up for questions in a minute, though, I've got one or two others, but anything that you want to add on, like the impact of these efforts? Maybe examples of things that AFI has done that, or
Okay.
that countries have done that
Okay.
show that.
One thing I did want to talk about, when we think about impact, that can mean many things to different people. Yeah. So impact for some people can be what we talked about in terms of being able to make a payment from the luxury of your own home, so the convenience. For some it would be, are we leading to increase in incomes, are we creating jobs, are we increasing social outcomes, access to education, health. So impact can have quite a broad range. I think what I would want to maybe talk about, something which we have started looking at more recently in AFI is, and it is driven by this trend that I talked about, where you have a central bank starting to embed financial inclusion as one of their mandates along with their other mandates. So traditionally, central banks have definitely had the mandate in most cases around monetary stability or price stability. And then many of them also have the mandate of financial stability or financial sector soundness and stability. And now they have this third mandate, which is financial inclusion. And one could ask, are there trade-offs? And how does a central bank balance these different objectives that they have? And I think this is a really emerging and interesting area for research to see how these objectives, does a central bank need to, is there a trade-off, or are there complementarities, or can they work in tandem? And we actually started doing some work on this last year. We call it our complementarity research initiative, in which we are planning to do a few country studies and also some global synthesis paper to look at how financial inclusion complements or works with these other objectives of financial stability and monetary stability. I think there is research, or some research already. In fact, recently, when we were working on this initiative, preparing for it, I think there are a couple of new IMF papers as well on this, which look at financial stability and financial inclusion, and I think they find complementarities in terms of financial inclusion or more access. In fact, there are pathways or channels through which it leads to financial stability. No, I think they're linked to monetary stability, because they look at the mechanisms through which this affects prices in a country, and they talk about effectiveness of monetary policy. So it improves the velocity of money, it brings it transfers funds from assets which are outside the financial system into the financial system, thereby improving the effectiveness of monetary policy. So I think there's already some evidence that they're not necessarily trade-offs between these objectives, but this for me, I think, and for AFI is going to be a really interesting project that we are working on. And so when we think about impact, for us it's also kind of looking at the institutional objectives and how these work together.
Good, good. Okay, why don't we open up for some questions before I pose another? Is that a hand I see there? No? No? Okay, right here, please.
Good afternoon, my name is Aban from Cambodia. So I have a question regarding the relationship between the financial literacy and the financial inclusion. So in your opinions, for the developing countries that have a low level of both financial literacy and financial inclusion, so which one the country should focusing on promoting? Because like once we have access to finance, the people also need the education on finance to use those financial access in the right way. And also like when on the other side, if people could have access to finance, they may have received the knowledge on the finance to themselves. So it seems to be related to one another, but do you, based on your experience, which one should the country focus on first?
I don't think it can choose. It has to, and you're absolutely right that they are correlated. Because if you, there's a lot of data on, so the World Bank does this Findex survey every 3 years. I think the first one was in 2011 and the last one was in 2021. And they're going to, I think, release the results for the next one in next month or something like that. And they ask, questions about to people on who don't use financial services. And the lack of information is often one of them. We don't know which financial services we should use. So creating or raising the understanding or awareness about financial services, especially that can lead to an improved level of trust in the financial system, I think will lead to more people accessing financial services and thereby raising the rates of financial inclusion. And on the flip side, like I said, if you are looking or you are seeing an increase in the rates of financial inclusion, especially if it is driven by what we talked about, digitization or offering these new players, new kinds of products and services, it becomes equally important to make sure people understand the products and services that they're going to use and what are the risks that are associated with those products. So for example, one of the innovations that we are seeing, and is there someone from Kenya? Anyone from Kenya? Yeah, so digital credit is a big one in Kenya, which also rides on this kind of having access to data, and you can just offer micro loans, nano loans to people based on, just on a click of a button. But then what you see is that where are those loans being used and what people are not able to pay back those loans, and then that affects their credit history and ability to access future loans. So I think personally my view is it's not a choice. I think it is, and that's why in most countries you see policymakers taking both together, and more now than before with digitization.
Yes, please. And then you next. So go ahead. I saw you first. You're next.
Thank you very much. So my first question is...
you are the multiple question asker.
That's why I'm saying first question.
First, I write this down then.
Nowadays, not nowadays, in general, there are discussions that, especially in developing countries, access to finance is very difficult, especially in rural areas.
Yes.
And then many scholars, maybe they are showing that in their papers that maybe expanding bank branches can reduce poverty. And then my question is, does it really work? Because at least I know one case, for instance, in Russia, there is one online bank which is called Tinkoff, where they provide all services online, so people can at home, they can open bank account, they can get access to credit, etc. And then these days, central bank or government, they should prioritize like online banking, or to rural areas they have to expand microfinance branches or bank branches.
Okay.
So this is my first question.
Yes.
So the
Oh, okay,
second-
well, let's go with that one, and then we're going to go to someone else, and you can come back.
Based on what we are seeing, I think the focus is definitely on online and digital as a policy priority. In terms of bank branches, there are some cases where for different reasons, the regulators will mandate the commercial banks to open some physical branches, but they will usually be for some specific reason or for some rationale. But as a broad policy, I think the trend is definitely towards digitization, and that is why you are seeing licensing of new kinds of financial institutions like digital banks, e-money providers, fintechs. That's where you see the wave of new policies and kind of financial sector development happening. And huge investments in payment infrastructure, development of instant payment systems, biometric, e-identity, all of that. I think that looks like the future, although it makes some people nervous.
And it's saving many countries from investing an awful
Exactly.
lot in bricks and mortar.
Absolutely.
Instead of this technology. You can tour different towns in the U.S. where there are former bank buildings that have been converted to different uses. But yes.
Hello, and I want to ask a question when it comes to the procedure you lend for the loans. So how your rate is different from the IMF rates when it comes to lending the loans? And as far as I know, the IMF loan lending is high interest rate,
Okay.
and then many developing and low income countries, they default because of high probability of default. That's the reason they're charging high interest rate.
Okay.
What do you think, like how your organization in terms of lending differs from IMF?
Okay, so we don't do loans. We are not a lending organization. Our organization is not like the IMF or the World Bank, which give funding through loans, bilateral loans to countries. Our organization or AFI is more like a knowledge platform. So our members pay a fee to become a member of AFI. So they subscribe to the organization, and by virtue of that, they get access to the knowledge and experience of all the other members. So that's the fee that they pay, and then in return for that, they get access to trainings, capacity building, peer learning, exchange with other countries. So where are you from?
I'm from Somalia.
So Bank of Somalia is a member of AFI. And so how this would work is that, let's say Bank of Somalia wants to develop its first national financial inclusion strategy. It's the first time they're doing this. They want to learn from the experience of other countries. So they will come to AFI, they're a member of AFI, so we will say, yeah, okay, so maybe we have, Tanzania, or we have Rwanda or Ghana, any country that has gone through this process has developed a national financial inclusion strategy. So we pair them together to help them learn from each other's experience, and then that hopefully will enable the Bank of Somalia to develop an NFIS. We do give small grants. So let's say you're ready to develop your policy, but you need some technical support, you need to hire some experts, so we will provide a small grant to enable you to do that. But we don't do, we are not a lending organization.
Other questions? Yes.
Thank you. It's an interesting topic. Digital financial inclusion, when you talk about it, it means the most smartest way is to use digital technology.
Mm-hmm.
So when we'll be using digital technology, I mean, for developing countries, it's a big challenge.
Yes.
For developed countries, it's a big opportunity.
Mm-hmm.
So in terms of developing nations, there should be a lot of investment should be there. So how they will get those kind of investment in terms of building their infrastructure, developing social structure. Also, for financial inclusion, it is also important to develop a big business model, because there should be a need to create the need for finance, because people will borrow only that time when there will be necessary, it will be necessary for them in terms of manufacturing or things like this. But these days, global leaders, they are imposing carbon tax, carbon tariffs, things like this. So imposing this kind of tax tariffs will also demotivate the developing countries to get lesser loans, because this kind of tariff or tax will also increase in terms of impact in inflation. So when there will be higher inflation, countries will be lending less. So that is why I'm trying to say, if the country is lending less money, so they will also investing less in terms of financial inclusion.
Lending less to who?
I mean, countries, they will be lending money from
Internally.
From international donor,
Okay.
because they need foreign. They need to increase their foreign reserve in terms of investment or things like this. So how global leaders can play a big role to motivate developing nations to invest in their social infrastructure, so that they can invest in financial inclusion and also develop a big business model.
Okay, I would challenge that assumption that it's easier for developed countries compared to developing countries. In fact, what we are seeing is that developing countries are almost leapfrogging the developed countries. Developed countries have legacy systems and legacy infrastructure, which is more difficult to undo and rebuild than to acquire the latest technology and to be able to use the latest digitization solutions that are out there. So in fact, if you ask me, I think maybe not the least developed countries. I think the resource challenge is very different for the least developed countries. But for the developing and emerging nations, they see the value in making this investment, because they are able to, they have the resources, they can borrow, like you said, they invest, and then they kind of leapfrog that stage or that linear progression. So in some of the most, I would say, innovative and modern payment systems that we are now seeing are in these countries. So I don't think that it is easier for developed countries. I would challenge that notion. At least that's what we are seeing in our member institutions. There's also a lot of now, interestingly, south to south exchange in this. So I don't know if you know, but for example, India has this quite well developed digital stack, digital infrastructure that they've developed. They also have a arm of, it's a public sector entity. Actually, we have the same in Pakistan as well, where we have a huge, this kind of digital ID database, and they have their own infrastructure and technology. And they also have these associated entities which sell or promote these solutions to other emerging and developing economies. So this is a really interesting development where you're not seeing technology transfer happening just from the north to the south, but rather you're seeing more of a south to south transfer and exchange of technology and knowledge. And this is, I think, you see a lot of it in the digital payments space these days.
And just to reinforce that point, I mean, even like 5 years ago, I was giving this example at breakfast. So I was in the middle of the Serengeti in Tanzania, and they had M-Pesa, which was a mobile money system, which was developed in Kenya next door and being used in Tanzania. And in this coffee and sort of tourist shop in the middle of the Serengeti, they had a sign, "No cash here, only M-Pesa and cards." I'd love to have that system in the US.
Yes. Yeah, I agree. I think, by the way, I think, now that I don't have data for this, I think it helps to have a younger population as well. I think the adoption of technology is much faster in emerging and developing countries which have huge young populations. and you see a very quick embracing of these new kind of solutions and technology.
We have one question from an alum who is on Zoom, and it's Boron Safak, the class of 2020 from Cameroon. He's asking, how can we address the issue of information frictions in developing countries that affect the cost of financial services even when people have access to those services?
Okay. Yeah, I think one of the innovations or solutions we are seeing is using the digital data. So, for example, as more and more kind of users transfer to using digital financial services, what that also enables these service providers, for example, the example I gave of Grab, which has data on me, how much I spend weekly on ordering pizza, how much do I spend, where do I work, how much do I spend on commuting, how many times do I travel abroad because I take a Grab to the airport, how much money do I maintain as a balance in my Grab. So they have a lot of this data. Plus now you're looking at this kind of exploitation of big data, which also goes to using social media, like you were saying, Jerry, in the morning as well, data to profile customers. I mean, it's kind of like a scary proposition, but it also has an opportunity here. And the opportunity is to use that data to be able to offer services to customers at a much lower cost. So I think the opportunity is there. Whether it will really convert to benefits for the populations that we are trying to reach, I think we are not there yet. I think there's some time to go. But I think the technology and the push from the policymakers is there. But we don't have evidence yet on whether it will actually lead to what we are trying to. This is also true for SME finance, for example. We are looking at experiments on developing algorithm-based credit scoring models, which we call alternative credit scoring mechanisms, where if businesses don't have the documentation or the credit history, which would otherwise make credit expensive. So you look at, if there's a micro entrepreneur or small enterprise, they can look at their payment behavior on utility bills, on their, cell phone bill payment behavior, and use those kind of transactions data to create a credit profile and thereby be able to offer them credit at maybe, I don't know if it's cheaper, but at least be able to offer them credit which may not otherwise be available to them. So I think some of these data technologies could be an opportunity to solve the information asymmetry which makes financial services expensive.
Actually related to that, so getting access to a credit reporting system could be valuable.
Yep.
Does your Grab company, because they don't have the information without that on your actual income. They can try to make inferences,
yeah,
especially when are you going to the airport to fly far away versus domestic travel. But do they get access to a credit reporting agency or not?
I'm not sure. I think now that they're a digital bank, they probably do.
Yeah.
But otherwise probably not. They
Okay.
wouldn't have access to the financial system,
Sure.
I think.
Makes
Otherwise.
sense. Other questions in the back there?
Thank you very much. I would like to come on the point of the mobile monies. In my country, we did
Which
a
is?
great job.
Which
Côte
country?
d'Ivoire.
Côte d'Ivoire.
Yes, so we had, as you said, data is very important, and when it comes to data processing in developing countries, especially mine, telecommunication companies have a lot of data and capacity to process the information. So we had a huge success in the mobile money, but they are limited. I mean, they cannot provide much services, and the amount that they can allow people to use is capped at a certain point.
Yeah.
So for the regulator, they had to either build a bank or stay in this service of deposit and transfer, just that. So when it comes to financial inclusion, we have those actors who can really process the information and attract a lot of money. And we have the formal banking system, which is less, where we have more constraint, as the previous question said. And we have some new actors, which are the fintechs, which allows us to do international transactions. And so from your perspective, is there some kind of boundaries? How can the regulator, because we have a trade-off between using more mobile and going to the formal one, where we'll reduce the saving rate, the deposit rate in the formal sector, while it will be growing in the mobile banking. So what should be the threshold, or how should we cluster those actors so that we can improve financial inclusion, yes, but also make the global financial system itself more efficient and enable the development of the country?
Okay, there was a lot of information in that question. So I'm going to try to answer some of it. But do you work for the ministry or?
Yes. I work for the tax authority now, but previously I was working for the telecommunication company, and that was
The reason I asked you is because AFI's regional office is hosted by the Ministry of Finance, Côte d'Ivoire, in Abidjan. So thank you very much for welcoming us and hosting us. So just let me plug that in, take that opportunity. I think you raise a very interesting point on where you have the telcos who have the data, and then who could do these innovative products around leveraging this big data. But then you have the banks which can offer the products, which can offer financial services, but don't have the data. So in some countries like Pakistan, you actually saw a merger, and the telecom companies realizing the opportunity that exists. So what they would do is often acquire the cheapest banking license available in the country. So at that time, microfinance bank license was in Pakistan was the cheaper banking license. So they get the banking license, which then allows them to offer the full suite of financial services. This is also similar to the digital bank license that many of the countries are now offering. It allows these kind of players, because you see the central banks and regulators are not comfortable with allowing non-regulated entities to offer deposit-based services. Credit, you can have several, and there's a whole problem of consumer protection there as well. But especially if they want to offer deposit services, they need to be regulated and monitored by the central bank. So that is one strategy that we have seen in practice, where these big telcos or information giants will take the cheapest available banking license, whether it's a digital bank license or an NBFI. I don't know, NBFI in some countries, but in Pakistan they took the microfinance bank, and then they would be able to offer the financial services. The other point that you raised sounded to me like you were saying that we would have an increase in the assets or of the new providers, the mobile money providers and the mobile digital banks, and we would have a decline in the conventional bank. I don't think that's true. The whole idea is for these new players to access new markets and to convert the informal sector to the formal sector. So if the policies are a success, it should not lead to a trade-off, but rather an overall increase in the size of the formal financial sector in the country. That would be my take.
Tom, do we have time for one or two more?
I'll take one or two more.
Okay. There was one in the back that I saw first, then I'll come to you. Yes.
Estella from Zambia. I wanted to ask you, so I think in the whole financial inclusion agenda, sometimes the people that we not really overlooked, but I guess they are sidelined a little bit, is the small savers or
Yeah.
savings. Even in the formal banks, like in my country, savings rates are very low, like interest on savings. So you're kind of disincentivized to put your money in an ordinary savings account because inflation is going to corrode the value of your money. And worse for a smaller saver who has to bear monthly banking charges and maybe even charges for taking out their money and things like that. So I know mobile money offers a cheaper alternative, but they don't pay you for your savings. And so what has become prominent in my country is like informal savings groups. So like I'll have a friend and they have a friend, and then we put money together and pay interest off of each other based on how much someone else would like to borrow. So like it's more or less like an informal way of savings, right? How do you think this integrates into the whole formalization agenda? Is it a good idea? What can be done in terms of bringing that money into, because I think at first it was small money, but now it's like very big money, which is like outside of regulation. And there are people who are losing out when such things do not work. But it's because they wanted to save, but they didn't have a place that would give them a good return for their money. And these informal settings kind of provide that. So I don't know what you think, like in the countries you work in, what are some of the ways to bring in this money to the formal place, or how do you regulate such informal things? Because I think there are like really a lot of that in my country.
Yeah, I don't think you can regulate them, but there have been some experiments. I mean, this model is not uncommon it exists in many countries where groups come together to save informally, and that pool of money can then be used in different ways. There have been some experiments where some of the fintech service providers, for example, have tried to mimic the same model, but it comes with kind of an institutional underwriting, so that which means that one group member can't drop out of the group midway, because there's usually like a cycle, one person accesses money, or so they kind of underwrite that risk. And the idea is to make it, but it is to just mimic those, but I don't think any of them have reached scale. And I think the financial service providers have a tough competition when it comes to meeting the convenience and efficiency with which these informal groups can convene, and at the costs at which they can operate. So I don't think we have seen a lot of success stories yet in terms of digitizing, for example, these saving groups. Having said that, I think there are other incentives and disincentives which inform people's decisions on whether to put their money in a bank or in a formal financial system or not. So, for example, in the context that I come from in Pakistan, people are, even if they have, let's say, access to financial provider, and the rate is also, let's say, decent, they don't want to put their money because they think, oh, we become part of the documented economy, and then the tax man is going to come for us. So I think in addition to the rate of return, there are some other kind of factors that can also be a disincentive. At least in the context that I come from, we see that a lot, that people would prefer to operate in the informal cash-based economy rather than declare their savings in terms of putting them in a bank account.
Mm-hmm. So last question.
Yes, thank you. I'm John from
Mozambique.
Yeah, I have one question. The thing is, the Central Bank of Mozambique started to consider financial inclusion in their mandate, and is doing this because there is understanding that it can help in terms of enhancing the effectiveness of monetary policy and help and bring up maybe the price stability in the economy.
Yeah.
But then there are some challenges that the central bank is facing in terms of come up with financial inclusion solutions, I would say. So And we understand this challenge because we take the concept of financial inclusion as a three-dimensional concept, which the first part captures the demographic aspects, which is related with the population living in a certain area. And by doing so, they cannot, because of the density of the population, which is very low, commercial banks doesn't have like incentive to invest in that area in order to make them use or get access to certain services. And also we have kind of demographic aspects, which I said geographic and then demographic, which is, I said geographic first, and now demographic, which is related with population, and geographic, which is related with distance to get access to those services. And the last one is kind of the level of use of service that the central bank, that the commercial banks provide, which is related to informality and level of financial literacy. And we see these challenges to increase the level of financial inclusion in our country. So my question is, how can we do to overcome these three challenges and these three pillars? I mean, demographic, geographic, and the level of usage.
You want me to write your national financial inclusion strategy?
Well, maybe if we had an extra 5 minutes.
Do you work with the central bank? So you just celebrated your 50th, isn't it, anniversary? So my boss was there to talk about financial inclusion and monetary stability. So I will send you his speech. You can read that one for the monetary stability. But I think the other one on the geographic with areas where density is low and conventional banks don't go. I think currently the main strategy everywhere is to look at how we can leverage technology to serve those areas. So for example, Jerry gave the example of this small micro shop in the Serengeti, but through a digital platform, even though, I mean, the population density in the Serengeti will be minuscule, I hope so. But they are able to be part of the financial system, and they can do transactions at a relatively low cost compared to so I think the main solution is looking at those kind of and of course, when we say digitization, digitization can also mean that the existing conventional commercial banks start using online banking. That often does not lead to financial inclusion, because those services are only for their existing client base or the already served market segments. I think what we are seeing is that regulators are looking at promoting, like I said, innovation through sandboxes, allowing new kinds of specialized institutions, fintechs to come in, mobile money operators, these digital kind of lending outfits that don't target the same market. Because if you are just allowing, the current existing to offer digital, which is also great, but if your objective is to reach the people in the underserved or the remote areas, then that's not going to work. So it has to be about encouraging new kinds of business models and new kind of players that can target those segments. The demographic, to be honest, I didn't catch that, but maybe we can take that by
But also,
what was the point?
what I heard also, in effect, because some of the challenges that you've laid out are definitely not unique. I mean, sure, there's some special. So does AFI gather where they can be published, the financial inclusion strategies of other countries?
Okay, so we have, this is a great plug for AFI's website. I'm sure my head of comms will love me for this. So we have a fantastic website. Everything that we do, all the publications are on the website. So as I said, we have 7 working groups. They look at these different, like you said, we had a broad we specialize in financial inclusion, but within that there are a number of sub-policy areas. So we have a working group on digital financial services, which has worked on several guidelines, frameworks on how countries can go about addressing some of the challenges that you talk about. We also have a working group on SME finance, which has done work on alternative credit scoring models, looking at other opportunities like Islamic finance and all those. We have a specialized working group on consumer protection, market conduct, which looks at issues like financial literacy, how do you set up effective grievance redress mechanisms, what kind of market conduct regulations do you need around cybersecurity, fraud prevention, and then we have 4 more. And all of that is on the AFI website. I think if you're interested in this, I would really encourage you to take a look. And many of your countries are represented there. We do a lot of country cases as well. And I'm super confident that you will find material which is even related to your specific country and definitely region for sure.
And if your country isn't a member, sign up soon.
Oh,
So we'd best stop the formal part of this session. Aban, I think, can stick around for a little bit longer to answer questions, which I sense there may be a few. But thank you all for your participation and your great questions, and thank you, Aban.
Oh, it was my pleasure.
Wonderful session.
Thank you so much for having me.
Yeah.